RBC is saying that the Canadian dollar could crash further in 2025. So we're going to get into that and what you can possibly do to even protect yourself against such a thing going on. So why a weak Canadian dollar won't stop the Bank of Canada from cutting interest rates. So basically, obviously, they're talking about the Bank of Canada being the cause of why the Canadian dollar is so weak, because they're obviously cutting more than the Federal Reserve. And obviously, it's basically like the US economy is doing much better than the Canadian economy. But really, is it? Or is it just that a broken engine hasn't broke down yet? So we'll get into it. So it's really interesting what they put here. So the Canadian dollar has taken a beating lately, pummeled by the growing policy gap between the Federal Reserve and the Bank of Canada, upheaval in Canadian politics, and the tariff threats of incoming US President Donald Trump. It isn't really so much that it's the tariff threats. There has been a lot of news about it being the tariff threats, and obviously that could really impact the Canadian dollar in the future. If Donald Trump does follow through with that, then there's going to be severe implications, obviously, for the United States as well, and we'll get into that. But obviously, when you actually pull it up, and what I've done here to compare and show you what's been going on, and that it hasn't just been an isolated case of the Canadian dollar crashing against the US dollar, it's actually been all the currencies going down against the US dollar. So basically, to compare this, I've got CAD USD, which is Canadian dollar US dollar. I've got GBP USD, which is the pound US dollar. I've got Euro US dollar, and I've also got Australian dollar versus the US dollar. And basically, you can see over the past year here, you've got the Canadian dollar, which is down nearly the most. The Australian dollar is also down a lot, but you can see they're actually all down. You know, the pound is down the least, but that's down 4%, which is still a big move for a year. You've got the Canadian dollar down 6.39%, Euro down 6.15%, and the Australian dollar down 6.6%. Now, if you pull this out to a 5-year chart, things begin to get even closer together. So you've got 8.96% the Canadian dollar is down over the past 5 years, which is incredible. That is a huge decline for a major currency. But still, when you look at it in the context of the Australian dollar, that's down even more over the past 5 years. You've got the pound that's down 6.18% and the euro that's down 7.33%. And you can see how they pretty much trade alongside each other. It's not very often that you see a massive divergence between these currencies. So it's more of a fact the US dollar is strengthening versus all currencies than just the Canadian dollar is crashing on itself, and it's because of the tariffs and it's because of the Bank of Canada. You know, the news always likes to relate something to a headline, and obviously those do impact the currencies and the way that they trade. That does definitely happen, but it's more like tailwinds and headwinds. There are thousands of variables, and to put it down to a news headline is very, very difficult to do. They do cause, obviously, moves in the currencies. There's no shadow of a doubt about that, but it's not as much as people think the reason why things are happening. It's just that we like, as human beings, stories. We like to be told stories about different things happening. And obviously, when they're logically and they fit in like that, we always think, oh yeah, that makes sense, the tariffs, and that's why it's going down. But anyway, according to a report from the Royal Bank of Canada, one of Canada's biggest banks, RBC expects the Canadian dollar to fade further to 78.96 cents versus the US by the second quarter as the gap between the two central banks widens. It was trading at 69.33 cents US this morning. I mean, yeah, that could definitely happen, because if you look at this, this is a long-term chart. We're actually looking at a weekly chart of the Canadian dollar versus the US dollar. You can see that we broke this major support here, which was around 70 cents. We've dropped below that. We could easily go as low as this 68.17 cents, which is the next level that is coming up. And then the one after that is 61.805 cents that we could test. So it'll be interesting to see, but when you actually look of how they frame this narrative, it's all to do with around how the tariffs are coming and basically the economy in the US is on fire. It says here the US economy is showing no signs of slowing, but it is in fact showing signs of slowing. If you just look at the unemployment data, if you just peel back of what's happening, even with the US dollar surging, that is never a good thing. When the US dollar is surging, that's generally a flight to safety moment. So that's showing. And it's funny because the stock market, obviously, as normal, is just ignoring the signs of what's going on. But that is nothing out of the ordinary. That's always the case. And bond yields are rising. But again, that's normally what happens in front of these financial crises. So it'll be interesting to see what happens after a blowout US jobs report Friday. Money markets have priced their bets on Fed rate cuts to less than one move this year. Meanwhile, Canada's economy continues to underperform its global peers, and RBC thinks it will get worse before it gets better. It expects the bank to continue cutting rates to a stimulative 2% by mid-year, widening the policy gap between the two central banks by another 125 basis points. So the interesting thing is they're saying 2% is going to be stimulative. In 2020, before the pandemic, in 2019, 2020, the rates were at 1.75%, and they'd actually start to come up during 2017, 2018. And then what happened is they would drop massively. But is that really stimulative? I mean, 2%, you hadn't seen that rate all throughout the 2010s. So for the past 15 years, until you got to literally 2017, 2018, you had not seen 1.75% rates. And they're saying 2% is going to somehow be stimulative when post-financial crisis, 2% wasn't even seen. So I think it's pretty obvious to see through that narrative. I think what's more likely to happen is the Bank of Canada will continue to cut. They are obviously weak. I don't think the Canadian dollar dropping on what happens there is going to concern them too bad, but it's definitely something that we should continue to look at, because I think the main implication of what can happen when that Canadian dollar comes down, obviously GDP per capita are incredibly low and you're in a per capita recession, but it's food inflation. And it's food inflation that you have to watch, because so much of the food is imported from places like the United States, and there's no competition for buying food in Canada. Basically, what you'll see happen is those prices start to rise on everything, because guess what? Loblaws, Metro, all these different places importing massive amounts of food. Do you think that they're going to foot the bill for the extra costs in the currency decline? No, of course they're not going to do that. So you're going to see the tailwinds for food inflation just continue to increase throughout 2025, and that is just going to put more pressure on people, because we are in this per capita depression and recession, and more people are going to food banks. They already can't afford food, and yet you're going to have more pressure on food prices actually rising throughout the year. Alberta Premier Danielle Smith, she met with Trump in Mar-a-Lago, and basically Trump said, yeah, the tariffs, they're definitely coming, pretty much just saying that he was reiterating what he's already said. Obviously, Trump has come out with so many different statements over the years, even before he was president last time, and a lot of those things just didn't come true. Now, it'll be very interesting to see if this does come through, because 25% tariff on all Canadian goods, yeah, that's going to have a massive impact on the Canadian economy, but it's also going to have a huge impact on the US economy. There's going to be a lot of government wastage there, and essentially it's going to mean people in the US are actually paying even higher taxes through the tariffs. So it's just funny the way Trump frames this, and people actually think, oh, tariffs are a good thing. It's going to mean more manufacturing moves to the US. But they don't think through at what cost is that going to happen? Is that really the most efficient way of doing it, by effectively forcing it instead of a free market? The US is meant to be free market capitalism, but we know, just like Canada, it's crony capitalism. It's not free market capitalism. And Trump is really showing his cards that he doesn't have a clue what he's doing with the economy. I don't know who do is advising him. And I think a lot of this is just talk, because I don't think Trump is really that stupid. I think obviously he knows all these different things. It's just all these things, these sound bites, these different statements, they sound really good to his audience. They sound really good on the face of it to his conservative base. So it will be incredibly interesting over the next 6 months what really happens with this, and it's going to be a crucial time for obviously for Canada. Now, what can you possibly do to protect yourself against the currency falling? Well, there's different things that you can do. Obviously, the one with the most history and the thing that has really proven and stood the test of time is by looking at gold. And now gold, you don't have to store your entire wealth in gold, but with gold, you can have a percentage of your wealth in gold, and basically it's just insurance on your currency decline. And obviously, if you've done this, and I talked about doing this years ago and saying that you need to have this insurance on your currency, and that's the way to do it. And once again, gold has shined during this. And if you'd held gold, if you'd held like a gold trust even in Canadian dollars, then you'd be winning. You wouldn't be losing. Because the thing is, if you measure the gain that's happened here, so just between April 2024 here and between where we are now in January 2025, you're up about 20%. And then obviously if you go from here down here, so this is from February 2024 all the way to January 2025, that's over 40%. So the Canadian dollar has just declined and declined and declined against gold. Obviously, another thing that many Canadians do, luckily anyway, so they don't really have a problem, is they actually hold the US dollar anyway. So the US dollar has done a very similar thing. So people who held US dollars didn't have all their money in Canadian dollars or had US investments. They really haven't lost that much because of the Canadian dollar declining. They might have actually gained, especially with the gains that you've seen in investments in the US, like the US major indices practically not far off all-time highs. So that's just a couple of ideas that I can give you on ways to protect yourself. I think it's a little bit late right now, because if you're looking at gold, it's practically at all-time highs. And if you're looking at the US dollar, again, it's just at the lows. Now, will it go lower? So just a couple of ideas really there to help protect you. So anyways, we'll continue to see what happens with the tariffs, and we'll continue to see what happens with the Canadian dollar. If you've enjoyed this video, I'd highly recommend that you check out this video here. If you want to join the inner circle and get early access to new content and help support the channel, please go to buymeacoffee.com/marketmania. If you also want to support the channel and get a VPN, expressvpn.com/marketmania. And I will see you guys